Hey everyone, welcome back to the Violet Vault. Have you ever scrolled online and seen someone claim that rich people don't just avoid debt, they actually use it to get richer? It sounds kind of wild, right? Well, today we're going to break down the exact strategy they're talking about. It's a classic Wall Street move called the carry trade, but it's being given this shiny new packaging. So let's get into it. Let's pull back the curtain on what's being called the Great Debt Swap and figure out what's really going on. Okay, so you see stuff like this all over Instagram and TikTok, right? Your bank wants you to borrow at 18%, but the elite are borrowing at 1% to buy assets that pay them 12%. Man, that is designed to get you fired up. It feels like you're being let in on a huge secret, you know? It perfectly frames this alluring idea, this financial hack. The promise is just so simple and powerful. What if you could borrow money for next to nothing and then turn around and invest it for a way, way higher return? And that simple idea is exactly what's at the heart of this whole thing. It brings us to our first section, the Great Debt Swap, and the incredible promise of what's called interest-positive debt. Now, this is a huge mental shift from what we're all taught. I mean, think about it. For generations, the advice has been, get out of debt. Debt is bad, pay it off ASAP. But this new way of thinking says, hold on a second. The goal isn't necessarily to be debt-free. It's to be interest positive. And what does that mean? It means your debt is actually making you money. It's generating more income than it's costing you in interest payments. You've literally turned the tables and created positive cash flow from money you borrowed. Wild, right? So the big question is, how on earth does that actually work? Is it even real? Well, let's pop the hood and look at the engine that makes this whole thing run. Okay, deep down, this whole hack is just a repackaged version of a very old, very real strategy used by big banks and hedge funds. It's called the carry trade. And the basic idea is actually super simple. Think of it like this. You go shopping for money around the world. You find a country where borrowing money is super cheap, like almost free. You take out a loan there, then you take that same money and invest it in another country where you can earn a much, much higher interest rate. So here's how the classic play works, step by step. For literally decades, the #1 move was to borrow Japanese yen. Why? Because their interest rates have been stuck near zero forever. So step 1, borrow a ton of yen. Step 2, you immediately convert all that yen into a currency like, say, the Australian dollar. Step 3, you use those Australian dollars to buy something safe that pays a high yield, like an Australian government bond. And boom, step 4, you profit from the gap. If you're paying, let's say, 0.1% on your yen loan, but earning 4% on your Australian bond, that difference, that interest rate differential, is your profit. And listen, this isn't just some textbook theory. This is happening right now, every single day, on a massive scale. So let's look at the global playbook and some real-world examples. So here you can see some of the most popular matchups. On one side, you've got your funding currencies. That's the cheap money you borrow. The Japanese yen, the Swiss franc. Look at those interest rates. They're practically zero. Then on the other side, you have the investment currencies, where you put the money to work. The US dollar, the British pound, the Aussie dollar, they're offering a much nicer yield. The whole game for these big traders is to find the biggest and safest gap between these two. And check this out. This is how the really wealthy players do it. They don't just walk into a bank. They use a special tool called a Lombard loan, usually from a private Swiss bank. It's pretty cool, actually. They use their huge stock portfolio as collateral to borrow Swiss francs for almost nothing, maybe 0.5%. Then they just take that cheap cash, flip it into British pounds, and buy safe UK government bonds that are paying around 4%. It's the same exact play, just done in a super sleek, high finance kind of way. Okay, I know what you're thinking. This sounds amazing. It almost sounds like a free money cheat code. But, and this is a huge but, there's a massive hidden catch. There's a reason why, in the real world of finance, this strategy has a very, very scary nickname. And here it is. This is the phrase every trader knows. A carry trade is like picking up pennies in front of a steamroller. Just picture that for a second. It works perfectly for a while. You're bending over, you're picking up these little pennies, your small, steady profits, and you're feeling great. But you're completely oblivious to the giant, silent steamroller that's heading right for you. And when it hits, it doesn't just take back the pennies, it flattens you. Let's look at the dream versus the reality here, because this is where it all falls apart. The dream is beautiful. You make a steady, predictable 3.5% profit every single year from that interest rate gap.
Awesome. But the reality is, the currency values themselves are constantly changing. And that's the steamroller. Let's say the Japanese yen you borrowed suddenly gets stronger by just 5% against the Australian dollar where your money is. In a single bad day, that currency swing can completely wipe out all the profit you made over an entire year or more.
So really, it all comes down to three main dangers you have to watch out for. First is that exchange rate risk we just talked about. The currency you borrowed from gets stronger and eats all your profits. Second is interest rate risk. What if the central bank in Japan suddenly decides to raise interest rates? All of a sudden, your cheap loan isn't so cheap anymore, and your profit disappears. And the third one is the scariest, crash risk. This is what traders call a peso event. It's when markets panic and everyone doing this trade tries to sell at the exact same time. The market freezes up and you're forced to sell at a devastating loss. So, where does all this leave us? We've got the online hype on one side and the harsh reality on the other. Let's wrap this up with a final takeaway and look at what the future holds for this strategy.
Believe it or not, the carry trade isn't disappearing. Nope. It's actually evolving, and it's finding a new home. The next frontier for this entire concept is in the world of decentralized finance, or DeFi. And as you might guess, this is making things even more interesting and even riskier.
The stuff happening in DeFi is pretty mind-bending, to be honest. People are using digital tokens that represent real-world things, like a piece of a building, as collateral to get these loans. Big institutions are dipping their toes in the water using special private pools that meet all their legal requirements. There's even talk of lending based on your online reputation, not just what you own. But, and you knew there was a but, this brings a whole new set of dangers to the table. We're talking about bugs in the computer code that could let someone steal everything, or these insane chain reaction sell-offs that can crash a whole system in minutes. And that really brings us to the most important point of this whole discussion. The carry trade is a totally legitimate strategy for giant institutions that have teams of PhDs managing the risk 24/7. The problem is, it's now being repackaged and sold to everyday people like you and me as some simple, easy wealth hack. And when it gets repackaged, they conveniently forget to mention the giant steamroller that's always lurking just around the corner. So it leaves us with this one big question to think about. As technology makes these kinds of strategies easier for anyone to try, is this really a good thing? Is it a true wealth hack for a new generation, finally giving everyone access to the tools of the rich? Or is it just a really old, really dangerous casino game that's been dressed up in a fancy new package? I'd love to know what you think. Let me know in the comments below. Is this a game you'd be willing to play, or does it sound way too risky?
Wow, that was something, right? But don't go anywhere, there's more coming, and it's gonna make you think in a whole new way. Quick reminder, if you like learning cool stuff without the fluff, subscribe now. You won't regret it.
Let me ask you something. Have you ever had that feeling deep down that your skills, all those years of experience you've busted your tail for, are worth so much more than what one single salary can give you? Well, today, we're diving into a huge career shift that is changing the game for pros just like you. We're talking about going from employee to a high-value powerhouse asset. You're going to want to stick around for this.
Wow. This question right here, it's a real gut check, isn't it? I mean, it just completely challenges the whole idea of a safe, traditional career. This idea that sticking with one company is the smart play, it's getting flipped on its head. This is saying that your loyalty, it might actually be a wealth tax. It could be the very thing holding you back from what you're truly capable of earning.
And that's where this whole concept of the authority pivot comes into play. And look, this isn't just some new fancy buzzword. It's a fundamental change in how you view yourself professionally. You stop being a person who just rents out 40 hours a week. Instead, you become a strategic weapon. You become the asset that companies bring in to solve their biggest, gnarliest problems and get massive results.
This slide just lays it out so perfectly. On one side, you've got the employee, right? Kind of stuck on a hamster wheel, trading a limited number of hours for a paycheck that has a ceiling. You can't make more time. But on the other side, you have the fractional asset. And their income? It's tied to impact. Think about it. When you can walk into a company and create $1 million result for them, your fee isn't just an expense, it's one of the smartest investments they will ever make.
Okay, and this is where the magic really starts to happen. Just look at that number. So how do you even get there? It's through this amazing idea called fractional stacking.
Instead of having one job, you work with a handful of clients. I mean, if your strategic brain is worth, say, $5,000 a month to one company for just a few hours of your time, what happens when you do that for 3 or 4 or even 5 companies at once? That's the moment your income finally truly breaks free from the clock.
So, what in the world is a fractional executive anyway? The name might sound a little weird, but it's so important to get this. We are not just talking about a fancy new word for freelancer. Not at all. This is something much, much bigger. We're talking about a very specific, very high-level kind of role.
Here it is. The key difference is you're not getting hired to just check off a list of tasks. No way. You're being brought in to lead strategy. You are literally plugging your years of C-level expertise, maybe as a fractional CMO or a CFO or a COO. You're plugging that expertise directly into a company's leadership team to help them navigate the big, game-changing decisions.
Now, this all sounds pretty incredible, I know. But let's be real for a minute, this path isn't for everybody. So let's just take a second for an honest check-in. Just look at these questions. Do you have that decade plus of deep, specialized experience? And maybe even more important, does the idea of being an entrepreneur, of building your own brand and being the boss of your own client relationships, does that genuinely excite you? And you know, that last question brings us to a piece of this puzzle that you absolutely cannot skip. Being an expert is not enough. You have to be seen as the expert. At this level, a simple resume just doesn't cut it anymore. You have to build a brand, a clear, powerful signal to the world that tells potential clients exactly who you are, what you stand for, and the incredible value you can bring to their table.
You know, the best way to build that brand is to tell your story. And I don't mean just a list of your old job titles. I'm talking about your journey, your unique philosophy on how you tackle problems, and most importantly, the hard, measurable results you've gotten for people. This little framework you see here, it helps you turn a boring career history into a compelling story that CEOs and founders will actually lean in to hear.
And of course, every great story needs proof. It has to be believable. And this is where a fantastic case study becomes your single most powerful sales tool. Seriously. It's how you take your value from this abstract idea and you make it totally real. It lets a potential client see their own problems in the before picture, and it gets them dreaming about that after picture, all with the social proof of another happy client singing your praises.
Okay, let's talk about the big one, the one everyone's thinking about: money. How in the world do you price your services when you're operating at this level? Well, it's going to require another huge mindset shift, moving away from that old employee thinking.
Let's be honest with each other. For an expert, the hourly model is it's broken. Have you ever felt like you're being punished for being good and fast at your job? That's exactly what hourly billing does. But value-based pricing, it flips the entire script. It aligns your income directly with your impact. If you can create $1 million outcome for a company in just 4 hours, your fee should reflect that incredible value, not the 4 little ticks on a timesheet.
So how do you even start this kind of high-value conversation without scaring people off? Well, there's a brilliant framework for this, and it all starts with one simple but powerful change. You stop giving away your best strategic thinking for free on sales calls. Instead, you make the strategy itself the very first thing they buy from you.
This strategy-first approach is an absolute game changer. I mean, look at those numbers. This isn't some small token fee. You're charging a premium for a high-impact, short-term project where you deliver a complete strategic roadmap. It's a win-win-win. You get paid to prove just how valuable you are, the client gets a concrete, actionable plan, and it becomes the perfect, seamless audition for a bigger, longer-term engagement.
Okay, so you've got the model down. You've built your brand. You have a pricing strategy that makes sense. Let's talk about the actual conversation. And the great news is you don't have to turn into some slick, cheesy salesperson. You just need a framework to help guide the discussion. And the SPIN framework is the perfect tool for this. It's not about selling at all. It's about being a doctor diagnosing the problem. You lead the conversation. You start by understanding their situation. You help them identify the real problem, and then, and this part is so powerful, you explore the implication. What is the true cost of doing nothing? By the time you get to the need payoff, the client isn't feeling sold to. They're the ones asking you for the solution.
So when you boil it all down, it comes to this one final powerful question. Your expertise, your experience, it isn't just a skill set, it is a high-value asset. The old model has you leasing that asset to one company for a fixed return. This new model empowers you to become the portfolio manager, diversifying your greatest asset across multiple investments to get maximum growth and freedom. So the only question left is, are you ready to be the CEO of you?
Wow, that was something, right? But don't go anywhere, there's more coming, and it's gonna make you think in a whole new way. Quick reminder, if you like learning cool stuff without the fluff, subscribe now. You won't regret it.
What if I told you that one of the biggest business opportunities right now isn't in some far-off tech hub, but could literally be sitting on your desk at home? If you think 3D printing is just a cool hobby for making little plastic figures, you might be missing out on a massive boom. Seriously, what if that spool of filament in your garage could become a real, legitimate stream of income? Well, today, we're going to break down exactly how that's happening.
And I'm not talking about some tiny little niche market. Check this out. The global 3D printing market is projected to hit nearly $36 billion by 2030. To put that in perspective, that's more than double what it is right now in just a few short years. This kind of explosive growth is happening for a reason. People want custom, personalized stuff, and the technology to make it is getting better and cheaper every single day.
So I want you to really think about this question. What if a factory could fit on your desk? It sounds kind of crazy, right? For 100 years, manufacturing meant these enormous, noisy plants and impossibly complex global supply chains. But that is all changing. That little machine right there represents a monumental shift, a move towards something completely new, small, local, on-demand production.
And that brings us right into our first big idea, the microfactory boom. And let me be clear, this is not just about printing keychains. We are talking about a fundamental change in how we make things. It's like a new industrial revolution, only this time, it's not powered by steam and coal, it's powered by digital files and creators just like you.
Now, the official term for the tech behind this is additive manufacturing. I know it sounds a little complicated, but the idea is actually super simple. Think about a sculptor. Traditional manufacturing is like starting with a big block of marble and chipping away everything you don't want. That's called subtractive, and it's really wasteful. But 3D printing is additive. It's like building that statue from the ground up, one microscopic layer at a time, using only the exact material you need. Nothing more, nothing less.
And when you put the two methods side by side, the difference is just staggering. You know, the old way meant shipping materials halfway across the world to a factory, making a million identical things, and then shipping them all over the world again. The new way, the factory is in your town, or your garage, or on your desk. This cuts supply chains down to almost nothing. It can reduce material waste by up to 90%, which is just incredible. And the best part? It lets you create products that are perfectly customized for each and every customer.
I love this quote from the futurist Michael Dimitruk because it paints such a powerful picture of where we're headed. Think about it. Why would you need these giant warehouses filled to the ceiling with stuff that might not even sell when you could just print exactly what a customer needs right when they order it? It's a vision for a smarter, leaner, and way more sustainable future.
Okay, so the big picture stuff is pretty revolutionary, I get it. But you're probably sitting there thinking, that's awesome, but what would I actually make that people would pay for? And my friend, that is the million-dollar question. The answer? It's all about finding your niche.
Here's the secret. The real profitability comes from specialization. You have to forget about competing with cheap, mass-produced junk. The real money, I'm talking about profit margins that can hit 30, 50, even 70%, is in high-value, custom products. Think about things like rapid prototyping for businesses that need to test a new product without spending a fortune. Or what about movie-accurate props for the massive, passionate cosplay community? You could even create simple add-ons that fix or improve existing products, tapping right into that whole right-to-repair movement. You're solving a specific problem for a specific group of people, and that's incredibly valuable.
All right, are you feeling inspired? I hope so. Because turning this idea into a real business isn't some crazy leap of faith. It's actually a series of clear, manageable steps. So in this next section, we're going to lay out your practical roadmap to go from hobbyist to hustle. See, it all starts with the plan. First, you lock in that niche we just talked about. Then, you actually map out a simple business plan. You know, who your customer is, how you'll price things. After that comes the fun part, getting a reliable printer, setting up a safe and well-ventilated space to work, and getting comfortable with your software. And finally, you have to tackle the step that almost everyone tries to skip, dealing with the legal and tax stuff right from day one. Trust me, it'll save you a world of headaches later. Now, for the big question, What's this all going to cost? Well, you might be surprised at how accessible it is. You can realistically launch a home-based 3D printing business for somewhere between $2,000 and $10,000. Yeah, a good chunk of that is the printer and the materials, but you also got a budget for things like software, maybe registering your business, and all the little tools and shipping supplies you'll need.
Okay, so you're up and running and making amazing things. Where do you actually find customers? Well, the best thing to do is start where people are already looking, online marketplaces. Places like Etsy, Amazon Handmade, and even Facebook Marketplace are perfect for unique, custom-made items. And here's a really important update. Etsy is now requiring sellers to offer their own original designs, and that is fantastic news for you as a real creator, because it helps protect you from a flood of people just reselling cheap files.
All right, before you run off and click Buy Now on that brand new printer, we need to pause for a quick but really important reality check. Running a business, even a small one, from your desk comes with real responsibilities. And if you ignore them, you could turn your dream into a total nightmare. I want to make sure that doesn't happen. So there are 3 major legal hurdles you've got to be aware of. First up is intellectual property. You can't just download a file of a famous movie character and start selling prints. That's a super fast way to get a scary letter from a lawyer. Second is product liability. If you print a part that, say, goes on a piece of baby gear, and that part fails and someone gets hurt, you could be held responsible. And third, there are regulations. If your product touches food, or is used for medical purposes, or has any electronics, it will probably need to meet really strict safety certifications.
So how do you protect yourself from all that? Well, things like having clear terms of service, disclaimers about how your product should be used, and maybe even getting business insurance. These are not optional. They are absolutely essential tools for limiting your risk so you can build a real, sustainable business. Seriously, don't treat this stuff as an afterthought. This is what separates the hobbyists from the pros.
So, there you have it. The tools to build and create are no longer locked away behind the walls of giant factories. They're on our desks, they're in our homes, they are more accessible and more affordable than ever before. This shift, away from a slow, wasteful global supply chain to a smart, local, on-demand one, is happening right now, as we speak. So the only question left to ask is, what will you create?
Thank you for spending time with us here at the Violet Vault. Don't forget to like, subscribe, and drop your thoughts in the comments below. I'd love to hear from you. Until next time, stay focused and keep growing.